So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again from Option Alpha, and welcome back to The Daily Call. Today we're going to answer the question, what pre-market analysis should you be doing? So this is often a question I get many times during the week. People are always wondering, Kirk, what are you doing before the market's open? Do you have a ritual, a routine? What are you checking? What are you not checking? What type of pre-market analysis and thought processes should we be going through? And the reality is I don't do that much. And that should come hopefully as a breath of fresh air, because I think oftentimes people can get, down a rabbit hole of news stories and market breaking coverage, all these things that pundits talk about on TV. And so I try to keep my morning routine very small, focused, and minimal at best. So usually what I do in the morning is simply track pre-market futures. There's an easy way to do that. You can do it through your brokerage account. You can do it through Bloomberg or Wall Street Journal, MarketWatch. Any of these major sites will show you where the futures are trading. And so the futures contracts give us potentially a little bit of an indication of where at least stocks are going to open. Doesn't mean that stocks are going to end the day there. But if the pre-market futures are down, I know that potentially there's going to be some selling. So I just mentally prepare for that. If the pre-market futures are up, I know that there's going to be generally buying in the market at the open. So I mentally prepare for that. So it's not necessarily where the futures are. It's just, are they, generally in an acceptable regular range? Are they down 0.5%? Or are they down 5%? If they're down 5% in pre-market trading, something major has happened, and maybe something major overnight overseas that I missed, and now I'm waking up and I should, kind of figure out what's going on. So again, it's not to say that if they're down, we should do anything different, or if they're up. It's just really the extremes that we're looking for. The second thing I usually do is I just glance through headlines. And I'm telling you right now, I never read any of the stories. I glance through headlines. Headlines can tell you everything you need to know about what's going on a surface level. So did so-and-so do this? What, Google got fined? Okay, I don't need to read the whole story. I just know that Google got fined. Okay, that's interesting. But what I'm looking for is just the major headlines that, again, could move the market. If somebody starts a war with somebody else, that's a major headline. If the Fed does something, or, somebody gets elected president, those are major headlines, right? Those are the things that I'm really looking for. I'm looking for market moving dramatic events in both directions, good or bad. Trump and China signed a tariff deal, major things that could move the market. That's what I'm looking for. And it's not that these will then create a situation where I'm going to reshift my portfolio. I just need to be prepared for a big move in advance. I don't want to come into the market, with the market open and then see this big move and say, well, what happened? What was the cause of this? Rather know generally what the headline is that kind of, drove the market in either direction. And from there, I really then turn myself off from it. So I usually check all of these things, in the morning when I get up, have some coffee, go through Option Alpha emails. But after that, I kind of, disconnect from the markets in general. I don't watch any news. I don't read any newspapers. I don't do any of that stuff. And I simply just wait until the market opens, come in maybe 15, 20 minutes after that and start monitoring positions and kind of going through my daily routine when the markets are open. So as far as pre-market analysis stuff, it's actually pretty simple. I think if you're building out a systematic portfolio that's based on odds and probabilities, then you realize that a lot of that market stuff is just to understand more so than to be reactionary. And so I feel like a lot of people, they read a lot of these headlines and then they get reactionary and they immediately do something on the market open, and then stocks reverse and a new news story comes out and they end up digging themselves deeper into a hole. So my thought process is I just want to understand generally what's going on and just be aware of big moves if big moves are coming so that I can prepare myself appropriately. So hopefully this helps out. As always, if you have any questions, let me know. And until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on The Daily Call from OptionAlpha.com.